Hello and welcome to another update video about gold. Yeah, gold went into the into the holidays with a break above the recent highs. Obviously, we had here this rally into the resistance area on Friday. It was okay. That was not an unexpected move because we were watching for here an ABC corrective rally in wave C. We're going to take a look at that in detail in a minute. But overall, this move up still looks somewhat corrective. So what I would assume based on the structure, based on how this looks, is that we get one more leg down deeper into the support area before we carry on with the C wave higher, I wanted to say. Yeah, the C wave higher into the area, maybe around $2,400. We're going to take a look at that now. Bear in mind that my base case for the metals is still bullish. I like the structure. I see this as a pretty bullish structure. Of course, you know, I could be wrong, but I mentioned it many times before. I've mentioned it throughout 2023. That if there is a doubt, you know, if I had to decide between generally a bullish and a bearish structure for gold, and there is a decent potential for a bullish wave count, and if I had to choose one side, I would usually go long or be oriented towards the upside. The main reason is that we know how quickly gold can run in a bullish structure. And the corrections typically take a long time. That's exactly what we've seen throughout 2023. I've been bullish on gold all year, and we've seen obviously a significant swing low here in October 22. It did at the time turn around in my target area and trend reversal box. We then rallied quite aggressively, really aggressively. I mean, you could say the performance between that October 22 low to the high that was made in May, around about 28-29% here on the futures chart. That might not sound a lot, but for gold it is quite a bit. Then we had this correction. You see how long and extended this correction was. Took pretty much nearly the same time as the increase. Very long and boring correction, but it actually did only, you know, if we talk about retracements, it only retraced a little more than 50% of the increase in wave one. And it basically turned around where it needed to in our support area. And then now we are moving and even made a new high in 2023. And again, the move up is quite aggressive. And there are different ways how this can be counted. The way I show you, or what I show you and showed you in previous videos, it's not even the most bullish scenario. You can, for example, see this move up as a 1-2-1-2 setup. There are different ways, but I don't like that idea too much. I'd rather show you a short-term, more bearish count, just so that you know there is a potential for a B wave down before we carry on higher. For me, more important than the wave count is actually the support zone. So first line of support is at 1894. Below that, we've got this support zone between 1853 and 1719. So that means if here the initial support area, first line of support, is breaking, we still have the lower support area, but then we would have to change the wave count, and I would have to extend the wave 2. And then this would just be an A, B, C, and as long as we're holding 1719, still my bullish base case can be justified. However, at the moment, I assume we are moving in the third wave. It is an ABC structure because it's all, you know, all that entire move up is an ending diagonal. At least that is one of the main interpretations that I follow. And this is the support area that's relevant. That support area covers quite a few different scenarios. But this here is my main wave count, in which an A wave of wave 3 topped on the 3rd of December. Then we came down already in the A wave of the B wave before a C wave rally starts. We're now moving up in the B wave of the B wave and should then still see a C wave of the B wave before we continue. Could we break out directly? Yep, no problem. Again, the bullish wave count for me has primary, main relevance, you could say. And in this B wave higher, we are looking for a 3-wave move. And to identify a target, you know, for this move up here, this corrective rally, what we can do, we can take the length of the A wave, we go to the low of the B wave. And what I typically like to do is I like to look at the 1-to-1 ratio, 100% extension level, which is at around $2,100 there. That's relevant because oftentimes an A wave and a C wave, they have a very similar length. So that's relevant. And anyway, from the entire resistance area is relevant, you know, but within this area, another additional level of interest is at $2,100. And the entire resistance area is between 2070 and $2,116. And then we could see a C wave down afterwards, okay, possibly targeting 1950 or 1894. Yeah, a sustained break below 1894 will indicate that this assumption needs to be revised, and we might then reset wave 2. But then we still have another support zone here, you know, before we really have to take a bearish approach. That's my update about gold. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also make sure that you follow us on Instagram and Twitter. And if you're interested in daily updates about the S&P 500, as well as updates about stocks, check out our stocks and S&P 500 service. You can find the link in the description. Thanks a lot for watching. Bye-bye.